continue this perspective. Of course, it's something that Canadians are obviously thinking about as well, given how integrated the economy is with the U.S. What about that protectionism? Will Canada fall victim to that? Will we be immune to it? A new survey by KPMG finds that over 700 small and medium-sized businesses in Canada are thinking about this. We've got Dino Infanti's partner and national leader of private enterprise tax at KPMG. Dino, thanks so much for joining us. Let's just first get a sense. What is the pulse telling you about the anxieties Canadians feel about the election?
Thank you, Amber. I appreciate that. Yeah, Canadian business leaders are worried about the economic uncertainties related to the U.S. election, as you mentioned, 11 days from now. And certainly Canada being highly integrated with the U.S., there's a lot at stake. Now, here's the thing. 9 in 10 are positive about their growth prospects, and that's fantastic news. But the same percentage are certainly worried about our Canadian economy and our economy perhaps becoming collateral damage from the growing U.S. protectionism and prospects of less favorable trade deals. So we're seeing that in the survey that is most pervasive amongst the larger private enterprises and those that are highly integrated with the U.S. economy and the supply chain, like manufacturing, auto, energy, etc. Now, amid all of this uncertainty, there's really two specific areas of concern: trade and taxes. And we talked about trade being possible tariffs on Canadian imports, and there's no guarantee that Canada will be exempt. And from a tax perspective, there's a level of frustration amongst private enterprises that new taxes and Canada's tax competitiveness relative to the U.S. is too high.
Well, I think that's good perspective, because I want to pick up on that point. That's generally, if you're a Canadian business looking to scale, there's no denying that going to the U.S. and scaling there has to be part of the strategy at a time where the growth prospects in the U.S. are better than they are in Canada. I guess, is the concern around election that that's going to make that a less lucrative proposition, or that these businesses might be shut out of that market?
Well, the concern is around possible new tariffs being levied, and there's many Canadian businesses that are doing business in the U.S. and accessing the U.S. market. And of course, if new trades and tariffs are levied, then that's a concern for Canadian businesses. Look, both nominees have pledged to reopen the USMCA. And there's some differences there in the context of what might occur. So Canadian businesses certainly need to be looking at their supply chains and plan for contingencies.
Dino, what are we talking about in terms of the ultimate damage here? We're each other's best trading partners. Why do you mess with that? I mean, you're talking about these tariffs, could impact tens of billions of dollars in economic activity.
Certainly, it could, and look, both countries have had an opportunity to be able to, for all intents and purposes, access each other's markets, and Canadians certainly wanting to access the U.S. market is critical. Now, ultimately, it will remain to be seen in terms of what changes might occur, but we're seeing this globally in terms of trade and challenges across the world.
Let's talk sector vulnerabilities, and you alluded to it. One of obviously the key sticking points has been the dairy industry and the protections around that. I imagine that will be a point of contention once again by a Trump administration, maybe even by a Harris administration. How do you think about that interplay? And it could also, maybe, Dino, it depends on who's in office in Canada as well, because maybe we're not that far off from an election.
You're right, Amber. Ultimately, it will certainly depend on the renegotiation of the USMCA and what the outcome of that may be. And the survey certainly did indicate that Canada is highly integrated and believes that the best way forward is to continue that integration. So hopefully there'll be a clear meeting of minds to be able to provide policies that allow for trade in an effective and simple way.
Dino, when you look at Kamala Harris versus Trump, what is your preference as a Canadian in terms of trade going forward?
Well, I certainly won't comment on a preference one way or another, Bill, but ultimately what's critical here is that these Canadian businesses need to be able to have their plans in place to be able to navigate through the what-if scenarios, as you mentioned, whether it's one nominee or the other that is in the seat. What we do know is both have pledged to reopen the USMCA. So who's going to be more aggressive, what additional tariffs might come into play remains to be seen.
You also,
I'm sorry.
No, go ahead, Bill.
I'll answer it, Dino. I think a Kamala Harris administration would be better for the relationship, business-wise and otherwise, going forward between the U.S. and Canada.
Well, and you're on the record for that, Bill. But I do want to bring up the point around tax policy. And Dino, you kind of alluded to this, coming at a time of looking at Canada's tax competitiveness relative to the U.S. Now, taxes and capital gains tax could go up in the U.S. Certainly, they are slated to go up in Canada on the capital gains front, and that certainly had a lot of Canadian businesses and entrepreneurs up in arms about that. Is that kind of a key factor here in some of your survey work?
It is. The two nominees have very different platforms. We know that. There could be the one scenario where there's an enhancement of the 2017 major tax cuts. Canada's personal tax rates are much higher than the U.S., and again, that makes Canadian businesses less competitive. The other scenario could be in the U.S. that there's a significant increase in the capital gains rate and more support for the middle class, which might be a closer alignment to the Canadian tax policies. But certainly, there is a level of frustration that was revealed in the survey from these business leaders pertaining to the Canadian tax regime and not being as competitive as the U.S. to be able to attract and retain the talent that's necessary in order to grow their businesses, and that's an important point. And that also dovetails into productivity.
Dino, thanks so much for joining us with that insight. That's Dino Infanti joining us from KPMG. Bill, I'd love to get your perspective on tax policy, particularly in the U.S., because you're obviously pro-Harris. And there is a lot of concern about what happens to tax policy at the high end, but even to entrepreneurs. Do you think they're going to start taxing unrealized gains?
Well, first let me get into the 2017 tax cuts. To me, that was just one of the worst pieces of public policy in the last 10 or 20 years. It was a tax giveaway. 80 to 90% of the benefits accrued to the wealthiest people and the wealthiest corporations. It blew a major hole in the deficit. So I understand Dino's point and Canadians' points that if those 2017 tax cuts, if Trump gets elected, he's going to re-up on those. And
our taxes are going up.
And your taxes are going up. I understand that it makes Canada less competitive, but I don't think you want to go down that road, because when you look at the increase to the national debt, which to me is the most important problem we face going forward, it just makes no sense to me. And Kamala Harris's plan of maybe increasing taxes at the highest levels and then giving some sort of support for people who are trying to start businesses. I just think that makes more sense. The idea of Trump running up another $7 trillion to the national debt, for what? So the wealthiest people and corporations can get even wealthier. It just makes no sense to me.
I'm hearing more and more people talk about the debt. I was just at this big investor conference, Capitalize for Kids. Jeff Gundlach was there. It's his number one concern, as you'd expect, as a bond fund manager. But the question I have is, when does it actually matter? When does it practically matter for investors?
It's a good question here, but it matters when it matters. It's one of these things. I've been in the business 35 years, and people have talked about it for a number of years, and it hasn't been an issue yet.
Not an issue.
But we are on a path, let's be clear, that to continue to spend the way we spend, you're going to wake up someday, I'm not sure if it's, 2 years from now or 5 years from now, et cetera, but you're going to need a wheelbarrow full of $20 bills to buy a gallon of milk. It's by far and away the biggest concern we have. Both parties have been undisciplined and irresponsible about it. When you look at Harris versus Trump, Trump clearly wants to is clearly going to run up the deficit more because he's going to renew those tax cuts. And, to what point? You're giving money to people who don't need it. It just doesn't make any sense to me. As I said,
it's not that. It's that they're the innovators, that you want to reward risk capital.
Okay,
I'm not saying I agree with it. This is the argument that they're the employers.
Let me address that, too. This is a supply-side nonsense that there's virtually no empirical evidence that there's any validity to it. That you give people at the top the big tax breaks and it's going to trickle down, help everybody out. No. As Warren Buffett said, it's an economic plan. It's a tax scheme masquerading as an economic plan.
Yeah.
That's what it is. It's a tax giveaway. It never works. It's not going to work here. The net long-term result of the Trump tax cuts in 2017 were massive deficits. If you look at the GDP numbers after 2017, 2018, 3%, 2019, back to 2.2%, it provided almost no long-term benefits. The only long-term impact was the national debt getting blown up even worse than it is.
You keep ignoring the fact that Biden did the same and, in fact, drove it up even more.
No, I said, Amber, both parties have been irresponsible and undisciplined.
Yeah.
Biden increased the deficit, national debt, 25%. So I'm not. That's indefensible, too. But if you're looking at the two on this particular issue, clearly Trump is worse. I think the increase in the national debt is one of the most important things. Issues that we have to deal with going forward.
We only have about 90 seconds left, but even you must agree that taxing unrealized capital gains hurts investment.
Yeah, I'm not for that.
Vital.
No,
do you think that that's something that ultimately comes to fruition under a Harris presidency?
No, I don't think so. I don't. Look, and the one thing that we've seen in the last month or two, the gap between Wall Street and the Harris campaign is slowly closing. I mean, there's been a lot of outreach on both sides. I don't think that would happen. To me, I'm not in favor of that at all. That would be a mistake. And so look, we saw with the FTC and Lena Khan with Biden that maybe definitely not as business friendly as some people would like.
Yeah.
I don't think we'll see that in the Harris administration.
Bill, what a pleasure to have you in studio. Thank you so much. We could keep on going, but that's our time. That's Bill Strazulo, a bell curve trading, who's been our guest. A lot of fabulous insights on the markets and politics and everything in between. Morning.